Welcome everyone. Today I'll be going over the reasons why I think Visa is a very good company, and then I am going to determine what price I should pay for Visa stock using my cash flow model. Because even though I like the stock, you can overpay for a good thing. And my cash flow model tells me at what price I should buy the stock based on my assumptions about the future of the company. So let's start with the reasons why I like Visa. Number one is that they have a high moat. Who doesn't have a Visa? And every time you swipe a Visa, they make money. Number two is that they have a very high profit margin, 50%. This means that they make 50% of their revenue in profit, which is insane. Also, they pay a small dividend, which is always nice. Number three is that this company has very low debt. Last year they had 18 billion in free cash flow and they have $30 billion in debt, which is the total long-term liabilities. When a company has low debt, it means that it is very hard for the company to go out of business and disappear. Finally, reason number four is that this company is still growing. Their revenue, cash flow and net income keep improving every year. Visa is a company that I want to own. So now the question becomes at what price? In order to determine this price, I have created a discounted cash flow model which tells me at what price I should pay for a company based on my assumptions on revenue growth, net income, free cash flow, P and price to free cash flow and the discount rate, which is the return I want to get each year on my investment. And this is going to be a 7-year analysis. Now I am going to briefly explain my assumptions. In terms of revenue growth, this company over the last 10 years has grown at a 10% rate. And even though this year they grew by 17%, this is because they were coming off a bad year with negative revenue growth. So the normal rate of growth is around 10%. And this is why I went 7% on my low assumptions in case they struggle, 9% on the middle assumptions, which I think is what they are going to do, and 12% on my high assumptions in case they crush it. In terms of profit margin, we have seen that this is currently at 50%, and it has been around 50% over the last 10 years. This is why I went with 48, 50 and 52%. And they have a bit more free cash flow, so I went with 49, 51 and 53%. In terms of PE and price to free cash flow, the average of the stock market is around 15. And you should definitely pay your premium for Visa because they have such a high moat and they are such a quality company. So this is why I went with 16, 18 and 20. Finally, the discount rate is the return you want to get each year on your investment. Because you can get around 9% when investing in an ETF, if you take the risk of investing in an individual stock, you should put a higher return. And as your assumptions get higher, your rate of return should be higher. This is why I went with 10, 11 and 12. As you can see, it is all red at the moment. My opinion is that Visa is a bit overpriced and I cannot wait until it reaches my numbers. Hope you enjoyed the analysis and I'll see you on the next one.